Hello there, it's me, Luwasi Forex. I'd love to welcome you to this second live stream. And I'm practicing. I'm practicing here. I'm practicing my live streaming. Now, I want to talk to you about three ways of entering a position. So what I'm having here, what you can see on the screen here, is basically Stellar USDT. Now, what is happening with Stellar USDT is, first of all, you will see a bullish Harami, right? So this is a bullish Harami pattern. Now, the bullish Harami pattern has appeared between the 20 day moving average and the 50-day moving average. And then we have a red candle. So this red candle is the pullback. Now, ideally, I'm supposed to wait for a green candle. And then now, the thing is that the green candle, I'm not waiting for the green candle, right? So I'm just doing a straight up pullback on the price. It's really just a straight up pullback on the price. And so that's my that's my main focus. You can also see it here on I think on Bitcoin. This should be Bitcoin Cash. Yeah. Now, what's challenging is, it is, especially for Bitcoin Cash, is the price is actually dropping way below the 50-day moving average. Now, the 50-day moving average in this case is the stop loss. But even below the 50-day moving average, I still believe this is a good entry. But ideally, I'm supposed to wait for a green confirmation candle, right? So after the pullback, I'm supposed to wait for the next confirmation, either a bullish engulfing pattern or a hammer for a safety entry. But I'm just pulling the trigger. The next example that I'm looking at was this one, which I posted about in my TradingView forum, which was American Eagle. Now, with American Eagle, what happened was it pulled right below the 50-day moving average, and that pullback, especially at the market open, when it went right below the 50-day moving average, I saw that as a perfect entry. Now, it's a little bit different from this one here, right? It's a little bit different from that, but if it pulls back right below the 50-day moving average, in fact, I believe that's the best entry, right? Like, you want a strong pullback. In fact, I don't know if I can close this one. Let me close this one and then re-enter right below the 50-day moving average, because what you want is a very, very strong pullback, and that's what I am looking for right now. Let's see what you have. Okay. By the way, I would love to thank my mentors, Tim Sykes, who wrote the foreword to the book, Penny Stock Course, Matthew Crater, who wrote the book Rocket Stocks, and Robert Kiyosaki, who wrote Rich Dad, Poor Dad. And when you have time, check out their books on Amazon Kindle. So that's what I'm doing now. So the entry is right below the 50-day moving average. So what I did was I closed my previous position, and then I re-entered right below the 50-day moving average. So ideally, that's what you want. You want to enter right on the maximum pullback. In this case, it has to cross the 50-day moving average. But one thing that I'm really, shocked about is maybe I should change all of them to moving averages, but it's fine. It's fine. Even just between these two moving averages, you'd be risking about 5% of your position. But ideally, if it can drop right below the 50-day moving average, that's the sweet spot. That's the sweet spot right there. Like just waiting for that maximum drop, which this one is almost there. It's almost crossing, right? Because I'm risking, I think, 10x margin. But the perfect one was definitely, this one here, which is American Eagle. This was perfect. This was perfect entry. Almost like I knew, what to expect. It was just, the perfect entry. What is that? What am I looking for? Okay. Studio mode. What's this? Alright. Signal strength. Okay. I think our stream is good enough. My software says the stream is good, but YouTube is giving me an error saying my stream is a little bit delayed. To maintain. So users will experience buffering. Okay. Alright, so maybe you are experiencing buffering if you're on right now. You can just reverse your video to about a minute or so. So yeah, so that's the entry right there. And also you can see this entry, even though it was below the 50-day moving average, it did pull back again lower. So that could have potentially, discouraged you from entering this position. But something just tells me in my heart of hearts that this is the perfect entry, especially the fact that it has pulled back in between the 50-day moving average just as well. Yeah. But ideally, in such a setup, you're supposed to wait. Let me see. So basically, you can see this is the bullish Arami, and this is the pullback, and you want to enter on the daily pullback. But when you go again on the weekly chart, let's see what you have. So on the weekly chart, we have an uptrend, right? So you can see that the chart is uptrending on the week, right? It is clearly in an uptrend on the week on the bullish engulfing pattern, but then you're waiting for that perfect pullback, and that's how the strategy is, because you're waiting for that weekly uptrend, right? And this looks like a tweezer bottom to me in the week. Oh, look at that, we have a green or something profitable on Bitcoin Cash. So ideally it should cross the 50-day moving average. If it can go below the 50-day moving average, ideally that's the perfect entry. That's what I believe. If it can just cross that 50-day moving average, just cross right there. But even in this case where it's 5%, you can still enter in the middle. But my favorite pattern is definitely this one here. So I really thought about you as you joined me on this live stream. I really wanted to create let me see if I can edit the title. Can I edit the title while I'm on the stream? If I can edit the title? Alright, let's see if I can edit the title of the stream. Yeah. Alright, I've just changed the title of the stream to the 3 indicators to use for entry signal to work. So yeah, this is it right there. Let me see what we have here. I think my streaming, my signal is still strong enough. I think I'm strong. I've been streaming for about 11 minutes. So this is the perfect example I could give. Now this is in the stock market, and then this is in the crypto market, and ideally we want it to drop below the 50-day moving average. So personally I would not trade this one here, but it's fine. As you can see, the risk is very much defined. The bullish harami, and you saw when I went on the weekly chart, you saw the tweezer bottom on Stellar, and then you saw the bullish engulfing. So you saw the tweezer bottom, which is a bullish pattern on the weekly chart. No, this is the bullish harami on the weekly chart, which appeared right here. But you saw a tweezer bottom on Bitcoin Cash, right, which looks like a pause button. Tweezer bottom, which looks like a pause button. So I think the pullback is stronger on the tweezer bottom as compared to the bullish engulfing on the week, right? So I'm also thinking of it like, oh, okay, on the week, the tweezer bottom over the stronger pullback in the bullish in Bitcoin Cash, and that's what we have here, because this is the 50-day moving average, right? It's not exponential, but it's the 50-day moving average. Let's see if you can see a pullback. The pullback was insane, but it was right below the 50. It's still below the 50-day moving average. So the entry is still there, still valid. But one thing you will notice about both patterns is for the fact that they both have bullish haramis. One thing I also noticed about this Bitcoin Cash is the bullish harami actually crossed below the 50-day moving average. Like, unlike this one, the bullish harami, only the green candle crossed below the 50-day moving average. Right? It's like both candles did not cross below. So the support is not very much defined. But let's see if I can switch it up. Let's see how it looks. if I use exponential moving averages, wow, if I'm using exponential moving average, the pullback is below the 50. While this one is above the 50, which is crazy, right? It's like the reversal of both. Because the other one, the exponential, this is the EMA 50-day moving average. The other one was the 50-day moving average. So this one has an E. It was an EMA 50-day moving average, while the other one that I had before was the MA without the E. So it's kind of reversed in positions, right? This one favors the exponential moving average favors Stellar, while the moving average favored the Bitcoin Cash. Look at that drop. This is insane. Okay, so maybe what I'll do is I'll close this position and specifically wait for it to cross the 50-day moving average for a perfect maximum entry. Kind of similar to what happened here, right? Because we waited for that pullback to cross the 50-day moving average, like right below the 50-day moving average. But ideally, what I'm supposed to do is wait for a green candle to confirm, right? There we go, it has crossed. So now that's the entry. It has clearly crossed the 50-day moving average. So that's the entry I was waiting for. Boom. Come on, come on. It's bounced back, cross below, boom. Exactly. So you can see the 50-day moving average is 38.12. Our entry is 38.11. So that's what we want. We want to end right on the pullback. Right on the pullback. Because what that's doing is it's reducing our risk levels. Because similar to what happened here, right? There we go. So that's it for this live stream. I hope you've learned a lot from the 3 ways to enter the pullback. You know, some of these things, it's better you see them live. You know, it's better you see them live. Oh, wow. Smokey Bear. Awesome. Hey, Smokey Bear. I see you. Thank you for joining me on this live stream. Thank you for the like. I see you, Smokey Bear. Awesome. I see you. Wow. Thank you for joining me on my live. Thank you, Smokey Bear. I hope you saw my entry position, Smokey Bear, because remember, you have to wait for the pullback, right? You have to wait for the pullback, Smokey Bear. Like, this is what I did right here, right? You can see on the simulation trading, right? I had to wait for it to literally pass the 50-day moving average. Okay, if you saw on the live, right, it had to pass, right? It had to pass the 50-day moving average. So thank you for joining me on the live stream, Smokey Bear. That's what's up. You joining me on this live stream means that you have learned so much about trading. So the key here is that we're trying to buy the pullback, right? That's what we're trying to buy. That's what we're trying to buy, Smokey Bear. We're trying to buy the pullback, right? So I had to wait for this red candle to pull right below the 50-day moving average, right? So thank you for the like, Smokey Bear. Shout out to you. Thank you for joining me for this live stream. And you know, that's how trading is, right? You want to see this stuff live, right? It's difficult to watch a recorded video and then you're just like, oh, I know how to trade watching a recorded video. So the key is the pullback has to be below the 50-day moving average, and that's what I did even for that's what I did yesterday for American Eagle, right? I waited for the pullback just to drop, because remember the price was dropping, right? So I waited for that pullback to drop below the 50-day moving average. I made sure the price was below the 20-day moving average. So I waited for that drop right there, right? And it just it dropped, right? And that's the key. The key was that the price had to drop right below the 50-day moving average. So shout out to you, Smokey Bear. I see you in the chat. Shout out to you. Shout out to Smokey Bear for joining me on this live stream. So like I said again, you know, you want to see these things live, right? You want to see trading live. It is difficult to see how to trade if it's not live. It is very difficult, man. You have to see this stuff live. So shout out to you, Smokey Bear, for joining me on this live stream. What do we have here? So it's still pulling back, and it has gone below the 50-day moving average. This dark blue line here, maybe I should change the color so that I make it more defined, because what's happening is that there's the 20-day moving average above the 50-day moving average. So that's what's happening. So the price is between the 20-day moving average. Let's see if I can let's see if I can change the appearance. So Smokey Bear, shout out to you. I see you in the chat. Thank you for joining me on this live stream. Okay, so that the dashed line, that's what you want. All right, you want it to cross below this dashed line. This dashed line represents the 50-day moving average. Then this straight line you can see represents the 20-day moving average. So you want the price to pull back. All right, you want it to pull back right below the dashed line. If you joined me earlier on in the stream, the price was actually above this dashed line, the 50-day moving average. The price was actually above that, and we tried entering while the price was above, and the risk was too much because I'm using 10x leverage on the simulation trading account. Right here on TradingView, I'm using like 10x leverage. Is there a way to like your comment? I don't know how. Oh, I can add you as a moderator. Yeah, okay. No, Smokey Bear, thank you so much. Appreciate the like. Shout out to you. I'm wishing you nothing but success in your trading. And you joining me live, I'm telling you the truth, Smokey Bear. You're like, your trading level is gonna go to the roof, man. So remember, the pullback has to be below the 50-day moving average. Now you've noticed this is the bullish harami, right? Now this bullish harami is giving you a buy signal. All right. So first, the buy signal comes in, then the pullback. Okay, now that pullback has to be below the 50-day moving average. Now, how far the pullback goes, I don't know, but their support is represented by this bullish Harami, right? Now, ideally, what's supposed to happen is the next candle after this daily red candle, the next one should be above the close of this candle, and that's your green light. That's your green trade. So on these trades, we're risking $1,000 on the simulation trading account. It's a $1,000 trade with 10x leverage. So this negative dollar sign you are seeing here is in relation to the $1,000 position. That's a 10x leverage, right? So again, the perfect example that I can give you is what happened yesterday, the trade that I did yesterday with American Eagle. Now, I think if you're into pop culture, you definitely heard about the advertisement with this famous pop star called Sydney Sweeney, right? So I think this, but I think there was a sale of shares yesterday. Let me see if I have something. But this one was very famous for those. I think those are celebrity. Yeah, here it is. Sydney Sweeney's ads helped bring in nearly million new customers between July and September. So that Sydney Sweeney thingy is what caused the stock price to go up, and then it gapped. So you can imagine the Sydney Sweeney campaign that American Eagle did. You know, between July and September, right? So the ad campaign was 2 months. It started from here all the way up to September when the ad campaign stopped, and immediately the price gapped up, right? But then what happened when the market opened yesterday was it opened right here, right? So I waited. I did not enter the trade. I waited. Then it